2020 has been quite a year. For many businesses, for many industries, it's been catastrophic. And yet, for those willing to look at catastrophe as opportunity, well, 2020 has been one of the best years ever. If you had known where to put your money this year and when to do it, well, you'd be quite well off right now. As an example of that, one investor named Bill Ackman made what's being called the single best trade of all time. He had a hunch back in February that the coronavirus pandemic would have a greater impact on the stock market than investors were pricing in. So he essentially made a wager that the bubble would burst, and he set up a $27 million hedge. He then watched as the virus and the fear spread, which turned his relatively modest bearish bet of $27 million into $2.6 billion. He then closed his position on March 23rd and immediately turned around, buying the stocks that were now on sale. And yeah, even though we all wish we had the foresight to make such a play, all he really did was form a conclusion and stuck to his convictions. And to that effect, I think we can also look ahead and find opportunities that are in front of us. In particular, I want to cover three areas, or really three trends, that could see massive expansion and substantial opportunities for our portfolio before the end of the year. So to start, let's cover a trend emerging from within the crypto space. I think the odds are that it's going to be a crazy end of the year for cryptocurrency and the blockchain industry as a whole. There's about to be a flurry of important crypto events in the next couple months, so let's go through each of them. Of course, Bitcoin has gone through its halving, and now we're in the post-halving push. And going by historical data, it took Bitcoin approximately 6 months after its 2016 halving to start pushing higher. And so that's been part of our investment thesis for a while now. Really, the interesting activity coming after Bitcoin's halving would start to pick up towards the end of 2020 into 2021. And the conditions, both exogenous and endogenous, certainly seem to support that. Then, looking at the number 2 cryptocurrency, we're coming up to the likely launch of Ethereum 2.0's first phase, or phase 0. And yes, we've been down this road before with Ethereum. We'd like to hope that this happens before the end of the year, but we're also not totally getting our hopes up. But even with that said, we are coming ever closer to it happening, and most analysts agree that this launch will have an extremely strong effect on the market. What's also interesting is that we're starting to see true competition to Ethereum. Polkadot, which is an interoperability protocol, is on track to be fully functional. I believe it's very likely that this will be a true competitor to Ethereum's DeFi and Web 3.0 throne, which I think will open up many interesting possibilities with competition. We should also see the Facebook-led Libra initiative, I know, actually start to launch with its new structure. It's certainly gone through some changes in order to appeal to regulators, so it'll be interesting to see what they bring to market. We'll also see Zcash have its own block reward halving, which may trigger an uptrend after a multi-year bear market. The next thing to consider, I think, is extremely exciting, as the value of coins locked up in decentralized finance, or DeFi, is on track to surpass $5 billion by September. And so why this is significant is that since the start of the year, the total value in US dollars that are locked up in DeFi protocols and projects had hovered around 700 million or so. But that was until crypto started to heat up and DeFi started to get noticed again. By June 1st, that total had hit 1 billion. It continued growing to 2.5 billion about 2 weeks ago, to hitting 3.6 billion a week ago, and now, as of today, it is at 4.5 billion in USD locked up in DeFi. So this is why I believe DeFi is one of the 3 major investing trends we need to pay attention to. It's clear there's been a massive shift towards DeFi lockup and investment, and I believe it's clear that DeFi's moment to shine is here. There's a lot of money chasing yield right now, and that money has to go somewhere. So DeFi is proving a willing and able platform to suit those needs. And what's always been the case is that DeFi is really just a door to enable decentralized finance solutions. That makes it a very different space than, 2 cycles ago when we had the ICO boom, or 1 cycle ago where we explored IEOs and security tokens and exchange tokens. All of those were reliant in some form on some sort of centralized platform or token, protocol, but now we're seeing a new cycle beginning, and with it we're seeing the potential, focus, and rapid expansion in both use and price for DeFi governance tokens. There's been more than $1 billion in total assets borrowed using Ethereum-based money market protocol Compound, which some view as the poster child of DeFi. And what's driven growth, what's driven interest in Compound and platforms like it, is the so-called yield farming craze. And yield farming is a catch-all term for generating yield by taking advantage of various non-custodial lending and exchange protocols. So using Compound as an example, you're able to earn Comp, its recently launched governance token, by lending and borrowing on its platform. Meanwhile, centralized exchange FTX has seen its DeFi perpetual contract, which represents a basket of various DeFi coins, appreciate by more than 50% when it launched a month ago. And certainly for the traders out there, DeFi is a dream come true. We're seeing traders increasingly moving into new DeFi tokens while at the same time de-risking by trimming positions in large caps like Bitcoin and Ether. And naturally that's increasing demand for trading in certain tokens such as Comp or BAL. So by every metric, Q2 has proven to be DeFi's breakout quarter. And on top of all this activity, the native tokens of these protocols have appreciated significantly as investors continue to bet on them and hope to capture substantial earnings from protocols vying to be the core parts of the DeFi future. So this is it. This is DeFi's big time to shine. And whether it rises to the occasion or burns brightly only for a moment has yet to be seen. But I think there's solid rationale behind its growth to come. I think DeFi is just getting started. And even if you aren't invested or interested in the DeFi space, well, a rising tide lifts all boats. And certainly the goodwill and the good momentum from DeFi is going to flood into the overall crypto space. And so with that, let's move on to the other two massive trends we need to pay attention to. Now, it's definitely been a devastating year for many industries, especially those that concern the activity of consumers outside their home. Retail, travel, sports, restaurants, and many more industries have been drastically hit by the economic slowdown. In particular, automotive sales have plummeted as they represent the most expensive consumer purchase outside of real estate, and they have little appeal or use in a lockdown. So, despite this being the worst year for the automotive industry we've seen in decades, there's been one notable company that's been an exception, at least according to the stock market. It's certainly been the case that Tesla has defied all expectations with their meteoric rise in share price over the recent months. In fact, Tesla was identified as our trade of the day for today, which for those who don't know, is a free daily trade idea and setup that we share on our Discord server. And I really want to highlight this because just in the last few weeks, we've made really profitable trade of the day calls before a massive bull move on stocks like AMD, Wayfair, Nvidia, Apple, Zillow, Microsoft, and Roku. Had you followed any of these trade of the day calls, you'd certainly be up by a double-digit percentage on your portfolio. And you wouldn't even have to think too hard about it because we don't just give you the ticker to look at. We also identify the entry point target, the stop loss we'd look to set, and sometimes we even share a high probability option strategy that could be used instead, which helps to minimize risk while maximizing return. You just have to join our Discord server. We give out valuable pieces of information and education and trade calls like this because we want to build one of the best communities in this space. So regardless of your trading background or experience level, we'd love to see you join, we'd love to talk trading with you, and we'd love to help you find opportunities to engage in. So join us by clicking the link in the bio below. Anyways, getting back to Tesla, its rapid rise in share price has certainly fostered an eruption in share prices of other EV-related companies. Everyone wants to know what is the next Tesla. And so that's where we come face to face with our other two massive emerging investment trends that you need to pay attention to: electric vehicles and the SPAC. So to explain SPACs and why they're one of the new hot trends in the market, I want you to imagine a professional in a fancy suit who comes up to you and says, I have a pretty good track record of investing in the stock market, and I want you to give me $500 million to go out and look for something that investors will love to own as a public company. And if I'm right, well, you'll make a bunch of money, but if I'm wrong, well, I'll give you your money back with some interest. All I need is a maximum of 18 months, but if you get bored or need your money back, well, you can sell your investment for a minuscule profit or loss, if any. SPAC is just a publicly traded shell company that has a bank account with $100 million or more, just sitting there earning interest. And the only sole purpose of that SPAC is to fund an acquisition of a privately held company. Basically, a SPAC is just a bet on the jockey, not the horse. And they're about to have a huge part in the electric vehicle game. This is where we see the intersection of these two trends. They build each other up. You have a massive expansion in the market for electric vehicles combined with a streamlined public offering capital vehicle. And already that combination is getting hot. In order to cash in while this trend is hot, bankers are scrambling to jam electric car maker startups into SPAC IPOs at lightning speed. And we've certainly seen this momentum translate to share price explosions when the deals are announced and eventually completed. If we look at some of the leading SPACs that are taking electric vehicle companies to the stock market through an IPO, a SPAC IPO, we're certainly seeing share price explosions when the deals are announced and eventually completed. I mean, just look at the percentage change column on that. And yeah, you might be scratching your head thinking, that can't be right. We're only halfway through the year and all these companies have at some point more than doubled, or even in one case, increased eightfold. And yeah, what certainly kicked off the SPAC and EV investing trend, what captured headlines everywhere was when Nikola Motors, privately held electric semi-truck company, announced their intention on March 3rd to merge in a deal valued at $3.3 billion. And yeah, that seems like a very high number, especially for a company that has yet to break ground on a manufacturing facility. In fact, their only profits in Q2 came from installing solar panels on the CEO's property. So regardless of the share price of Nikola, be it $10 or its peak of $95 in June, most fundamental investors would argue that, yeah, it's overvalued, especially considering that it's yet to build or sell a single truck. And yet, despite that, investors and traders and speculation gods are making an enormous bet that Nikola will execute on its business plan and build the truck of the future. That will be a lot easier to accomplish with $700 million sitting in the bank. And so right there, that is what you can identify as the investing thesis. All you need for the justification of the premise that by using SPAC IPOs to go to market and to raise capital in a rapid fashion, electric vehicle startups that are going public this year are going to go absolutely ballistic, especially because there's so much cheap capital floating around in the market right now. And even though most of these companies probably won't make it, even with massive amounts of backing, it's still a pretty good bet that at least some of them will make it and will start to really capture much of the market share of the overall automotive industry, especially because the legacy automotive industry is on life support right now. While they're doing damage control, the EV market is raising capital and going public and gaining momentum. And so even if on the surface it seems ludicrous and it seems very indicative of the crazy times we live in, I'm not going to let that stop me from seizing opportunities where I see them. And when we look at these three emerging investment trends, DeFi, SPACs, EVs, if you were to judge them where they are today, well, yeah, there's not much to go on. But if instead you compare them to the industries that they're looking to disrupt, centralized finance, the legacy automotive industry, the traditional IPO, each of these are also fundamentally flawed and absolutely paralyzed in the current conditions we find ourselves in. As we covered, no one's buying cars right now. No company is looking to go through a traditional IPO right now. And with so many people out of work and businesses closed, banks and the finance industry are not doing so well either. So both from an opportunity as well as an innovation perspective, these emerging trends do represent what is to come. And I think that right there is about as good of an investing thesis as you could ask for. Now, after all, those who prepare for the future inherit it. And those who invest in the future, they profit from it too. And so I want to hear what you think. Do you believe that these are the big emerging trends right now, or do you think there's other trends that I didn't consider? What do you think are some emerging investment trends what investment trends are you watching? And where are you looking to find opportunity in all of this uncertainty? Well, let's discuss this in the comments below. And again, if you haven't done so already, definitely consider signing up for our Discord. And as I mentioned on Tuesday, Doc is releasing a new module for our Futures Masterclass, covering the Digitex Futures Exchange, which just launched. So for those who use the coupon code Digitex before we release that module, you'll get access to a 40% off discount. which goes away the moment that we upload the new module. So don't delay if you're thinking about trading on Digitex or want to learn how to effectively trade futures in general. This is a great time to be trading futures and options and learning to use these tools to your benefit, because the more you can do to mitigate risk and maximize return, the more you can do to preserve your capital and grow your account, well, that gives you more opportunity to invest in trends like the ones I covered in this video. So invest in yourself and invest in the future. I think you'll be all right. So with that, thanks for watching, guys, and I'll see you in the next one. Cheers.